Hello, welcome back to this week's market update. I hope everyone had a happy Thanksgiving. Today is December 2nd, 2024, and it was a quieter week, but with that, we will jump right in. The holiday week saw a lighter flow of macroeconomic data, but delivered pretty important updates on October PCE and personal income and spending figures. November closed as the strongest month of the year for the S&P 500 as well as the Dow, with gains across all major indexes. For the week ending November 29th, the Dow Jones Industrial Average rallied 1.39% on the week, the Nasdaq Composite gained 1.13% on the week, and the S&P 500 rose 1.06% for the week. Finally, the Barclays Aggregate Bond Index outperformed equities in the last week, rising 1.42% as of close on Friday. Heading into this week's economic data, we got PCE inflation for the month of October, which showed monthly inflation at 0.2% in the month, while annual inflation came in at 2.3%. So it was a slight uptick from September there as we started to get really close to that 2% goal, but then we saw this uptick here in October. Then on core PCE, that rose 0.3% in the month and 2.8% compared to a year ago. So again, another slight uptick from September's data there. By category, goods prices fell 0.1% in the month, while services prices rose 0.4%, with much of the cooler inflation in goods driven by very modest food price inflation, while energy prices actually fell 0.1% in the month of October. With PCE inflation remaining above this 2% target that the Fed has, some economists are skeptical that they may hold off on a rate cut in December. Current market expectations for the December FOMC meeting suggest a 38% chance of no rate cut. So from here, we don't know, is inflation going to start trending up again? Is it going to trend down towards this 2% target? We're not sure. But what is sure, the Fed will definitely be considering this month of PCE inflation data in the December meeting. Also, last week we got the personal income spending and savings report for the month of October. October's personal income spending and savings report showed positive trends in income and spending heading into the holiday season. We saw personal income jump by more than expected, with the after-tax disposable personal income rising 0.7% in just that 1 month, while personal outlays, aka personal spending, rose 0.3%. So the growth of income rose at a faster pace than the growth of spending, and that led to a slightly higher savings rate of 4.4% in the month as income growth outpaced spending. Also, last week we got consumer confidence for the month of November from the Conference Board. It rose for the second consecutive month, driven by growing labor market optimism. It rose 1.9%, so you can see that small uptick there, continuing the trend from the prior month. It rose 1.9%, nearing the upper range of where it's been in the last 2 years. So you can see it's been in this kind of narrow channel of consumer confidence since 2022. And now the question is, does it continue to improve, or will it kind of go back to that mean reverting level where it has been for the last 2 years? So within consumer confidence, we saw gains primarily attributed to consumers' improved assessments of current economic conditions, particularly job availability. On the other hand, though, expectations for future business conditions remained flat, with a slight dip in optimism about future income. Also notable from this index here, consumers under 35 drove a lot of the increase in confidence, while those aged 35 to 54 saw a modest decline following the jump in October's consumer confidence. Confidence rose broadly among low and middle income groups earning from 15,000 to 125,000 annually, and these positive trends signal a lot of resilience in consumer sentiment. So, good foundation as we head into the holiday season and, very big spending season, even though the holiday season is a little bit shorter as the weeks between Thanksgiving and Christmas are 3 weeks as opposed to the normal 4. So it'll be interesting to see how this higher consumer confidence feeds into retail sales data for November and December. Last but not least, sales of new U.S. single-family homes fell to the lowest level in nearly 2 years in October as rising mortgage rates pushed many buyers to the sidelines. New home sales dropped 17.3% to a seasonally adjusted rate of 610,000 homes sold in the months. You can see that's quite a drop off there and notably lower from a year ago. While the median sales price of a new home sold, it did increase to 437,300, a little bit higher than it was a year ago. It is below October 2022's median price of 460,300. So we are seeing a lot of softness in the new home sales market from that post-pandemic rally. This decline in new home sales contrasts with the rising volumes of existing homes sold during the same month. So, new home sales tending to be a bit weaker in recent months, while existing homes, kind of older, maybe a little bit more affordable homes, they have been a little bit stronger in recent months. With that, we thank you very much for tuning in to this week's market update, and we look forward to providing another update to you very soon. The information you have heard is the view of Synergy Asset Management as of the date of publication. These views and opinions are subject to change without notice. Investors should not act on any recommendation, express or implied, or information in this material without obtaining specific advice from their financial advisors and should not rely on information herein as the primary basis for their investment decisions. Information contained herein is based on data obtained from publicly recognized sources and is believed to be reliable and is not expected to be updated after initial publication. This information has not been independently verified, and Synergy makes no representations or warranties as to its accuracy. The material has been prepared solely for informational, educational, and market commentary purposes and is not a solicitation of advisory services or an offer to buy or sell any security or to participate in any trading strategy.